What is the stock market? The stock market is the collection of markets and exchanges which contain tradable shares of companies. Investors can buy these shares in hopes that their value will increase and they will make money. In today's video, we will be talking about some topics including stocks, how to make money with the stock market, common vocabulary, and some popular stocks. Let's begin with stocks. The stock market is built on the public buying and selling of stocks. Most companies have stocks or shares of their company for sale on the stock market. Investors can buy stocks from other investors if they think the company's value will increase, or sell them if they believe the opposite. How to make money. There are some basic principles that all investors know to follow when investing in stocks on the stock market. Buy low, sell high, diversity, and fees. The most basic principle is to always buy at low prices before selling for a higher value. If you sell for less than you bought a stock, you're guaranteed to be losing money. Always following this tip will ensure that you make a profit. While it isn't always possible, it should be kept in mind every time you are buying or selling stocks. Diversity. The second thing to keep in mind when buying stocks is a variety in investments. Instead of investing all of your money into one company, spread it out. This way, if one company does poorly, your other investments can help you recover. If you only buy one stock and it does poorly, you lose a lot of money with no chance of recovering any. Fees. Something important to think about when purchasing stocks are trading fees that come with your purchase. You should always check how much of a fee you will have to pay for trading your stock and factor that into your profit margins. There are also some common terms that you will need to know before investing in the stock market. Bear market, bull market, closing price, diversification, opening price, portfolio, symbol, and yield. Bear market is a period of declining stock value. During this period, selling is encouraged. Bull market, a period of positively rising stock value, which is typically accompanied by investor optimism. Closing price, the price of a stock when the market closes for the day. Diversification, reducing investment risk by purchasing shares of many different companies in different areas of business. Opening price, the price of a stock when the market opens for the day. Portfolio, holding of various stocks. A trader's portfolio contains the different stocks that the trader owns. Symbol. A ticker symbol or stock symbol is used to identify shares of different companies on a particular stock market. Each company has their own symbol. Yield. The measure of return on investments in terms of percentage. Yield is calculated by dividing the current price of the share by the original price paid for that share. Popular stocks. Many stocks are popular because the company is well known and makes plenty of profit. If the company doesn't do well, their stock won't improve in price. Therefore, most of the popular stocks are typically companies that are common names. Stocks also grow over time, so stocks that might be more valuable in the future are also popular. The four we'll be talking about today are Amazon, Apple, Netflix, and Tesla. Amazon is the biggest online retailer in the world, selling thousands of items every day. Amazon is used by people around the world. They are viewed as the place to go to buy any item, and their Prime service allows for delivery quicker than any other online service. Because of this, Amazon stocks are valued for the future, with no sign of losing value. Their symbol is AMZ. This graph shows the growth of the Amazon stock over the last 10 years, as it's grown from under $50 per share in 2008 to over $1,050 per share today. Apple. Apple is arguably the best known technology company in the world. Almost everybody has an Apple product, and they are known well. Because of this, they are one of the most popular stocks for investors to buy. Their stock symbol is AAPL. This graph, you can see the growth of the Apple stock over the last 10 years, as it's gone from only $13 per share in 2008 to over $145 per share today. Netflix. Netflix is a very popular online streaming service containing thousands of shows and movies ready for watching on demand with only a paid subscription. With over 100 million worldwide subscribers, Netflix is dominating the entertainment industry. This gives Netflix great value for the future and is why its price has already grown $40 this year in just 23 days. Their symbol is NFC. This graph shows the growth of the Netflix stock over the last 4 years, going from $40 per share when shares of the company were first publicly traded in 2014 to over $200 per share today. Tesla. Tesla is known for their production of electric cars and other futuristic innovations such as self-driving cars. They are viewed as the automobile producer of the future, and therefore are a popular investment. Their symbol is TSLA. In this graph, you can see the growth of the Tesla stock over the last 5 years, as it's gone from just under $35 per share in 2013 to over $350 per share today. Thank you for watching.